Good day, fellow investors. One stock that I often get suggested to analyze is Xiaomi. Probably pronounced that wrongly, but I'm sure you'll correct me in the comments. And I especially get a lot of emails about that stock. So here is an analysis as I took a look. So let's start with the usual stock price overview, and then with the business overview, financials, valuation, as we do always. So a recent IPO went public, didn't do really good for the first year, which is often the happening with Chinese stocks, and then it exploded, and now as the situation is a little bit vibrant, let's call it like that, it is also down. And I got a lot of emails. Sven, can you analyze? The market capitalization is 479 billion Hong Kong dollars. The price earnings ratio is 15, expected to be around 20 next. So let's see whether this is a great investment or not. The business overview, of course, it is a smartphone maker, also fridge maker, future car maker, so tech but hardware. And if we look at their business, the revenue over the last quarter was 78 billion renminbi, so they have $500 million of users in the user base, so they are also doing Internet of Things and advertising, and they have the third global smartphone position and the fourth in China. Revenue growth over the last quarter was 8%, which is still good. Net profit increased 25%, especially mainland China. Monthly active users increased significantly. They are increasing their market share in the premium smartphone market, depending on how much you are paying, from $500 to higher. And if we look over the global smartphone market share, you can see Xiaomi expanding their market share over time, more than doubled it over time. So they did really well. Samsung is stable at around 20%. Apple a little bit declined depending on the iPhone out, so now 14%. And the average has been improving for Xiaomi, so they have been doing really good. And if you look at the markets they are dominating in, we have Croatia here, but India adds some features that might become the new normal, so likely a very good smartphone, especially for the price. Of course, Internet of Things revenue growing 50%. They are making fridges. Probably the fridge will do your shopping via your phone one day, and they are entering the car business. Now, of course, you are a tech company, hardware, so cars, Apple Car, Tesla phone, everyone is doing the same, which from my value investing perspective, as I always look for moats, so what is your durable competitive advantage, then I'm thinking cars, what is Xiaomi's durable competitive advantage? Of course, everyone tries to make the ecosystem, fridge, smartphone, car, whatever, but somebody will be the winner and someone will make a lot of money by investing in the right stock. But you will never hear about all of those that lost investing in the wrong stock. Nokia, Ericsson were dominating the market, then we had the BlueBerry, then Apple. So you never know which one will dominate and which one will really be good, and how long will that last before you find something else. And that's also a risk, which makes Xiaomi more a bet than other. Nevertheless, let's do a valuation. If we look at the fundamentals, they have really exploded over the last 6 years, and then this again tells me, why can't somebody else do the same? So quintuple their sales in 6 years. This is really staggering performance. If we look at their 9 months revenues, so 242 billion renminbi, that's really good, growing fast compared to year earlier. If we look at profits, so 60 cents in the first 9 months will likely be 1 renminbi, so 1/10 1 or 15 Hong Kong dollars, I don't know the exact measure. And if I go to my intrinsic template, you can check the premium one with everything I own on my research platform if you are interested. If I click here, I've put here 1.1, and if we look at the growth ahead of 15%, 10% then, discount rate of 10 and a 20 PE ratio, which is now the expected PE ratio for Xiaomi, then we get to an intrinsic value of 24. If I compare that to the price, it promises, yes, a return above 10%, which makes it an interesting buy at current levels. If the growth is 25% and they can really make great things with penetrating more in India, increasing prices, doing better, getting a better terminal multiple, I think Apple's terminal multiple is above 30, then this is a free bagger. As of now, even more, this is a 7-bagger over 10 years. However, if the growth rate is just 10%, then let's say 6%, then terminal multiple of 15 on earnings, they never pay a dividend because they invest in cars, fridges, satellites, who knows what, then the present value is a little bit lower. The fact is that I have no idea which one of these scenarios will develop, and the fact is that actually nobody knows. So this is what makes this company not really an investment, because we have no certainty at all. We have no moat, and we have players that are attacking them, and they will do whatever they can to get that market share. And you can see here how those market shares change over time. Sometimes you are hot, sometimes you lose, and that's something that you simply can't predict, or it's very hard to predict. This could, of course, be the next Apple, the next Tesla, 7x, 10x. That is something that we'll have to see, but I prefer less of a bet investment. So I will not follow Xiaomi, unfortunately, but I'm a value investor. Just wanted to make a quick video to answer all the suggestions that I got. But if you like value investing, please smash that like button. Don't forget to download my free template below, and I'll see you in the next video.